Okay, welcome back. I mean, the market seems to be making a bit of a move. 18,140 now, so about 30, 40 points from the time that we started. That 18,100 level has been basically, I think, the average the day so far where the market spent the maximum amount of time. So let's see. Still 40 minutes to go. Jay Bala of cashthechaos.com is joining us to take some questions Tuesday afternoons as always. Jay, good to have you here. I mean, so will this be a big throwover? Or do you think, I mean, this is good for more? What's your sense?
Yeah, thanks for having me on the show, Prashant. I think the market is good for a little more, but I just want to reiterate the point that I made on the 2nd of August on the show that even if the market were to make record highs, it will continue to be treated as a large bull market correction, which I called it that way around the end of October last year and beginning of November last year. So, the reason for that, I'll spell out in easy to understand manner, very important data points. The markets have come to 18,100 from 15,100. The markets declined from the April highs of 18,100 to 15,100 in 51 days. It has taken 92 sessions for the markets to come up here compared to the 51 session it took for the markets to decline. So the market is saying the ease of movement is not to the higher side. And if you look at from a 12 months perspective, most sectors, barring the FMCG and autos, are clocking negative returns on a 12-month basis. And even if you look at the great barometer, which is Reliance, which is diversified sector, it's still negative. And if you look at dollar-adjusted return, we are at minus 18% from the record highs. So the talk of decoupling happened in 2008 too. The US markets peak in 2007. Indian markets went up till January 2008. And then in 10 months, in less time than the US markets, the Indian markets fell 64% compared to the 57% the US markets fell. So, all this is actually a repeat of what's happening. Even if you recall from the 2013 interaction with you, I said when the corporation tax was cut that, this is not the start of a portfolio allocation, it's a trading rally. So once again, the market is doing the same thing. So we're going to have, markets push to higher levels, say somewhere close to record highs, 18,600, maybe even 19,000. But that again, the probability of 90,100 has increased to about 30% from here. But we have to take it one day at a time. So this is not a start of portfolio allocation. Again, just treat it as a trading rally.
Okay, all right. Hi, Jay. Well, we've noted your views and we have got those, resistance levels as well for our viewers. But let's talk about the Nifty Bank. And for me, what's interesting is suddenly the big boy, HDFC Bank, that's been out of form, it's suddenly, middling the ball well, so to call it in cricketing parlance. What's your view on the Nifty Bank and in particular HDFC Bank?
Yeah, HDFC Bank has got a little more upsides to work with, Nigel, probably around 1550, 1575. But it still looks like a corrective rally. It's just taking on the mantle from SBI and Axis, which was leading the market so far. And it's just a little bit of stock rotation within the sector. The resistance for the sector comes in about 41,850 to 42,300. And if the Nifty is proceeding towards record highs, I think this will push somewhere towards 44K. But there is a mild fatigue visible in Axis and SBI. We need HDFC to continue to rally. If that does that, this rally can sustain for a little bit more.
Okay, what have you made of this divergence that we're seeing in the private sector banks? ICICI is under pressure. Axis Bank, of course, the news that large block of 4.1 crore shares, that's weighing on the stock price. But HDFC Bank has fired away. Your thoughts on the banking space and which is the stock which looks attractive?
Yeah, like I said last week, I said it's very odd that HDFC Bank is not rallying and the markets have heard that and, that stock is going up. And I think Axis is still not complete, although it's weak today. There is probably a teeny bit of upside left in both SBI and Axis, but ICICI is probably exhausted from here. So I would, so if you're already holding longs within the sector, you can hold on to it, but it doesn't make too much sense to create fresh longs in the sector.
What about, sectors like IT, Pharma, Jay?
Yeah, I've been relatively bullish on these two sectors, and I put out a note for the pharma sector about 2 weeks ago that it's rallying somewhere close to 14,400. But this is just a short-term rally, and I had pointed to relative strength in Sun Pharma and Cipla. They are continuing to go ahead. But if you are already long, hold on to it. Don't create fresh longs. Glenmark, which is coming off a large base. If it closes above 415 within the sector, I think that might be providing a 20% rally from here, as long as it stays above 380, 375. So the target is about 484 Glenmark Pharma. When it comes to IT, there is relative strength in Persistent, Mindtree, and the L&T Twins. But the resistance for the sector is about 29,400 to 31K. I think it's probably rallying to 31K. But I'm still treating this as just a short-term rally. I would have loved to go outright bullish on the sector, but I think the sector needs to do some more basing pattern here. So at the moment, I'm treating it as a relief rally.
Okay, all right, Jay, let's talk about a couple of long trades then you're betting on. ABB and SCI. You like both those two, I believe. What are the levels you're targeting over there? How are they looking on the charts?
Yeah, see, ABB from the September highs has come back to the recent lows in a harmonic fashion, which we call it a correction. As long as the stock stays about 2850, I think it's heading somewhere close to 3800. And SCI I've been pointing out for a couple of weeks now. That it's actually coming out of a bullish inverse head and shoulder continuation pattern. So I've been pointing out a couple of weeks that if it closes above 126, it's likely to rally to 160. So that's the objective here. But it must stay above 112. As long as it stays above 112, this reversal pattern is valid for the stock.
All right, Jay, we'll leave it there for today. Thank you very much for joining us and running our viewers through what you're making of things. So a push higher